Hello and welcome to AE Accounting Tutorials. We are continuing our lesson on manufacturing accounts. But in this particular video, I want us to take a practice question on how to prepare manufacturing accounts. But take note that in the part 1 of this video, we've already looked at the basic concept of manufacturing accounts, the format of the manufacturing trading profit and loss account. But this practice question is on how to prepare manufacturing accounts. So if you are new to this channel, I will encourage you to subscribe to this channel, share this video for others to also benefit. So without wasting much time, let's quickly go through the question and see how we could prepare the manufacturing account of the manufacturing firm. So let's go through the question together. The following figures relate to the accounts of Jojo Manufacturing Firm for the year to 31st December 2022. The currency sign is Ghana cedis and 3 zeros are up, and it affects all the figures. Stock at 1st January 2022, we have raw materials of 48,000, work in progress 24,000. Stock at 31st December 2022, we have raw materials of 60,000, work in progress 27,000. Purchases of raw materials 540,000, carriage on raw materials we have 18,000. Manufacturing wages 240,000. Factory expense and maintenance 21,000. Factory heating and lighting 60,000 Ghana cedis. Factory power we have 90,000 Ghana cedis. Wages of foreman 156,000. Direct expenses 12,000. Rent of factory 48,000. Insurance of factory plant and building 12,000. Lubricants 18,000. Depreciation of factory plants 25,000. You are required to prepare the manufacturing account for the year ended 31st December 2022. This is the question, and we are required to prepare manufacturing accounts for Jojo Limited for the year ended 31st December 2022. To begin solving a manufacturing account question, the manufacturing account itself is prepared in order to ascertain the cost of production. So I normally tell my students that in solving manufacturing account question, they should first determine the cost structure. What do I mean by the cost structure? That is the components of the cost of production, because the manufacturing account itself is basically prepared in order to determine the cost of production. So we will look at the cost structure. So before we begin to prepare the manufacturing account itself, let's first of all determine the cost structure. So cost structure. Cost structure. So the cost structure has to do with the components of the cost of production. So the first component is what we call prime cost. Prime cost. The second component is factory overheads. Factory overheads. So when we add these two together, then we arrive at what we call cost of production. Cost of production. This is what we are looking for. This is what we prepare the manufacturing account to ascertain. So these two components are very key. So this prime cost has to do with direct material cost, direct labor cost, and direct expenses cost. So the prime cost has to do with the summation of these three elements. Is that okay? These three elements are the expenses that can be directly traced to the product made. Okay, so the factory overheads too has to do with indirect material cost, indirect labor cost, and indirect expenses cost. And the factory overheads too has to do with the summation of these three indirect expenses. Okay, and these expenses are the expenses that cannot be directly traced to the product made. So the addition of these two will give us what we call the cost of production. But then these are normally given in the question, so it becomes very easy to identify them. But then the direct material costs are not given, so we have to find it. Okay, we have to do some addition and subtraction in order to determine the direct material cost. So now we begin with what? The manufacturing account itself. So we are going it in this order. So we begin with the direct material cost. So the direct material cost are the materials that are used, the raw materials that are used in the production of the product. So we begin with the raw materials. Raw materials. Good. So to begin with this, we begin with what we call the opening stock. That is opening stock of raw materials. So we begin with opening stock of raw materials. Everything I write under raw materials is raw materials, so I don't need to be adding the raw materials. So from the question, you could see from the question that the opening stock of raw materials is 48,000. Opening stock is 48,000. Very good. After recording the opening stock of raw materials, the next thing to look for is to add purchases, if there is any purchases of raw materials. So from the question, you could see purchases, so we add purchases. I said this purchases is purchases of what? Raw materials. Very good. We add purchases of raw materials. If there is adjustment to be made on purchases, we record it at the first currency sign. If there are no adjustment that need to be made on purchases, we add it direct to the opening stock. Is that okay? In order to determine the net purchases of the raw materials. So from the question, there are adjustments that are supposed to be made. So we have to record it here, and the amount is 540,000. When we look through the question, the adjustment that's supposed to be made on this purchases has to do with carriage on raw materials. So we have to add carriage on raw materials. So add carriage on raw materials. You see, I said we have to determine the direct material cost. That is the direct material cost that is actually used or that is consumed in the production of the product. So that is why we are doing this. For manufacturing companies, because of the going concern concept, they will be in the business for several years. But if they close for the accounting period, the leftover materials that are in the business, in the subsequent year, that leftover material will become the opening stock of raw materials. But maybe what they wanted to produce might not be enough to meet their customers' request. So they need to purchase more. That is why we add purchases of raw materials. We want to know the raw materials that are used in the production. So when we add the purchases of raw materials, then if there are any other costs that we incurred in bringing that raw material to the premises, we have to add it. Is that okay? And that is an amount of what? 18,000. So when we add the carriage, we will arrive at an amount of 558,000. And this represents the net purchases of raw material. So net purchases. So this is the net purchases of raw materials. So we add the net purchases to the opening stock of raw materials. So when we add, we will arrive at an amount of 606,000. And this becomes the cost of the raw materials that are available for use. This is the raw material that is now available that we can use to produce. So we say that cost of raw materials available for use. This is what we can use to produce the product. Now, after producing the product, at the close of the accounting period, there could be some leftover materials. That is what we call the closing stock. But you could see from this question that the question did not give opening stock and closing stock directly, but it is the date that you use to check. One was on 1st January 2022. That is the opening one, 1st January. The closing has to do with as at 31st December 2022. That is the closing. So the leftover materials will be subtracted from the cost of raw materials available for use. So we now subtract the closing stock of raw materials. You see, from the question we have raw materials, closing stock of raw materials, and then we have closing stock work in progress, opening stock raw materials, opening stock work in progress. I told you that everything we record under this is raw materials. That is why we are picking the both opening and closing stock of raw materials, but not work in progress. Work in progress are those products or works that are into the process of becoming a finished goods. But here we are talking about raw materials. So the closing stock of raw materials from the question is 60,000. So we subtract this 60,000. So when we subtract, we arrive at an amount of 546,000. And this now becomes the cost of raw materials used to produce the product, or cost of raw materials consumed. So cost of raw materials consumed or used good in a production process. Now we are able to determine the cost of raw materials used. That is the direct material cost. So we are done with this. The next thing to look for is the direct labor cost. Is there any direct labor cost from the question? When we look through the question, there is a direct labor cost. Is that okay? And the direct labor cost we could see is factory wages, because the direct labor costs are those labor costs that can be directly traced to the product made. We have two labor costs in this question. We have the factory wages, and we have wages for foreman. But then the very direct one has to do with the factory wages. So we have factory wages being the direct labor cost, and from the question it happens to be an amount of 240,000. 240,000 as the factory wages. So let's look at the direct expenses cost as well. Looking at this question, the only direct expenses cost is the direct expenses itself. The other expenses are indirect, and all indirect fall under factory overheads. So we are only looking at the direct expenses cost, and we have one direct expenses cost in the question, that is 12,000. So we have direct expenses, and that is 12,000. So we are adding. So when we add this three. So when we add, we arrive at an amount of 798,000. Good. And this 798,000 is what we call the prime cost, because the summation of these three give us the prime cost. Is that okay? So we have prime cost. So after getting the prime cost, the next thing to do is to add what we call the factory overheads. And the factory overheads, we've established that it is the summation of indirect material cost, indirect labor cost, and indirect expenses cost. So we have to add the three. We have to look through the question and try to figure it out. Is that okay? Good. So we look for factory overheads. So with the factory overheads, we just have to look through the question. Is that okay? Good. So we are adding these three together. So let's look through the question and try to identify the factory overheads. By looking through this question, the first factory overheads we can see is the factory expense and maintenance. So factory expense and maintenance Factory expense and maintenance is 21,000. The next factory overhead that we can see from the question is factory heating and lighting. So factory heating and lighting. This is another factory overhead. And the amount from the question is 60,000. Good. So let's clean this portion and continue from here. But remember that we are on the factory overheads. Now, after recording the factory heating and lighting, the next indirect expenses in this question is the factory power. So we have factory power, and the factory power is 90,000. Good. Then when we look through the question again, we could see that another indirect is wages of foreman. Wages of foreman. So the wages of foreman is an indirect, and it is an amount of 156,000. The wages for the foreman is indirect because it cannot be directly traced to the product made. Is that okay? Good. After that, looking through the question, we could see another indirect expenses, that is the factory rent. So you could see factory rent, and the factory rent has to do with an amount of 48,000. Good, 48,000. The next we can talk about from the question is insurance of factory, plant and building. And it is an amount of 12,000. The next indirect is lubricants, and it is an amount of 18,000. So lubricants, and the amount is 18,000. So when we look to the question, we could see another indirect expenses, that is depreciation of factory plants, and it is an amount of 25,000. So depreciation of factory plants. Depreciation of factory plants is 25,000. Good. I think looking through this question, that is all with regards to the indirect expenses. So we have to add the indirect expenses up by starting from here, and we'll add all this, and it will give us an amount of 430,000. Good. This is the total of the factory overheads. Then we come to add it to the total of the prime cost. Okay, so when we add prime cost to factory overheads, you will arrive at an amount of 1,228,000, and this is the cost of production. But before we record the cost of production, you have to ask yourself, is there any adjustments on cost of production? If yes, then the addition of the factory overheads and the prime cost should give you a gross cost of production. But if there are no adjustments, then that will be the cost of production, the actual cost of production. Because there are adjustments, then we call this gross cost of production. Okay. The adjustment that we have to make on the gross cost of production has to do with the opening and the closing work in progress. I told you that work in progress are those products that are still under process to become a finished goods. So we adjust them as such. So we will add opening WIP then we less closing WIP, meaning work in progress. And from the question, the opening work in progress is 25,000 and the closing has to do with 27,000. So we add 25,000, then we subtract 27,000. We less, so we put it in brackets. That is an outflow. So when we add this, the gross cost of production to the opening work in progress, then we less the closing work in progress of 27,000. We will get an amount of 1,225,000. Good. And we will call this net cost of production. Net because there are adjustments on the gross cost of production. Good. So this is how we prepare a manufacturing account. But take note that after ascertaining the cost of production will be transferred to the trading aspect of the manufacturing account. That is where we will see finished goods. So the cost of production will be added to the opening stock of finished goods in order to determine the profit, the gross profit. Is that okay? So what I'm trying to say is that after ascertaining your cost of production, the cost of production will be added to opening stock of work in progress. Okay, it will be transferred to the trading account. So one key thing I want you to also take note is that if there are no adjustments on the cost of production, then this should be transferred. But if there are adjustments, as we've done over here, then the net cost of production should be transferred. Sometimes to the manufacturing business may decide to transfer their products at a market value, meaning that they wanted to add a profit margin to it before they transfer. If that is the case, then the profit margin they wanted to add, we call it a manufacturing profit. Then we have to add that manufacturing profit to the net cost of production. Then the answer we will get, we call it a market value. Then that market value will rather be added to the opening stock of finished goods in the trading aspect of the manufacturing firm. Before, if there is any other external purchases, then we add. So this is how we prepare a manufacturing account. In our subsequent video, you will take a full practice question that you will be required to prepare a complete manufacturing trading profit and loss account. Okay, that is where we will be talking about the transfer at market value. So if you haven't subscribed to this channel, kindly subscribe to this channel and also share this video for others to benefit. Thank you.